Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning market webcast. Okay, so on the continuation chart on ES, we've got new all-time highs. We traded as high as 85. I was made aware this morning that the September contract back in January printed a high of 28.89. When on the continuation contract that day, the high was 78. I want to say 78.5. That's, I mean, my response to that is, that's nice. I mean, if somebody wanted to pay that much of a premium on that particular day, I mean, that's special. But for me, the continuation contract is what I use on my daily charts because it most mimics cash. And I always want to be focused on what was happening in the front month at the time, okay? Where were the most amount of eyeballs on any particular day going forward? So, you know, on the September contract, do we need to take out 89? Yeah. Do I think we will today? Probably. I think we will. I mean, this thing really is in no rush to go down. But for me, on the continuation contract, we've taken out the high from January 29th. And, you know, we were sitting at new all-time highs. Cash made a new all-time high on Friday, and it just kind of goes from there. So what's happening? You had, let me zoom this in a little bit. So the Bears had stopped the band ride back on the 22nd, 23rd. They stopped it here. They pulled back into the 9-day, and they just could not figure out the 9-day. And when that happened, it gave the dip buyers license to come in, continue to hold the 9-day. They created compression. They won the 9-day and the hourly compression. So you look at the hourly chart. So your hourly chart here, here's your new weekly pivot down at 28.6675. So look, Thursday into Friday, compression, potential higher lows, whipped them up, whipped them back, chop city. We're just fighting in this compression zone. Compression breeds expansion. Look, it could have been down, but it wasn't. It was up. So what did we end up doing Friday? We were long 63.25, and we talked about that on social. Really nice move up, up into the 70s. Then into the close, we got long 72. So we're still long 72. We've taken a nice chunk of profits out of that. We still have it. You know, and you know, one of the things that we do, and I harp on this all the time, and I'm not trying to sell you a car, but what I'm saying is this: it is so much easier to stay in tune with the trend of the market versus trying to fight a tape that clearly on every pullback wants to be bought. Now, whether it's because it's August, whether because it's summer happy fun time, whether it's this, that, or the other, who cares? The reality is it wants to go up, it doesn't want to go down. You can fight it and have a miserable day, or you can get in tune, you can get on the correct side of the freeway, which is what we try to do in the room. You can, you can be long, ride it, and do very well. So we had a fantastic week. We had a 50-something handle week. This week is getting started off right. We've got handles booked on the long from 72. It's still going up. I don't know why I would sell my runner right now. I want to see just how much damage it can do. The key for me today is, what is the hourly mid band going to do when and if it's tested? It's sitting at 81 now. So you're going to have to see the hourly mid band support price on any retests today. Okay, it's a long way down to weekly pivot. I think it would take news today to get that done. You would have to see some kind of sea change to really get that going. So the reality is, how far can this market reach? The one thing I don't want to hear from anybody today, and it's what I'm going to tell everybody in the room, is please don't tell me this is parabolic. Please don't. Because that is, well, first of all, it's wrong. Second of all, it's probably bred out of one of two things. You either are short, you want to be short, or you're not long. Okay? The reality is, we touched this. We touched the upper band. We went and did 74. We pulled back to 46, and we've now ground up to a new high. I mean, this is a very orderly move to the upside. This is not lift off and run away. Maybe it turns into lift off and run away later. But as of 8:06 Eastern time on Monday morning, we're not parabolic. This is a very orderly grind to the upside. which makes it particularly frustrating to fight. We talked about this last week. It just drips, and it drips, and it drips, and it drips. And the weak shorts get stopped out, and the weak shorts get chopped out again and again and again. We call it rinse and repeat in the room, okay? So my suggestion is, if you're not in it, I would not run around starting to buy highs, or you'll end up like the guy that bought the September contract back on January 29th for $28.89. That was a great trade. But it's been a long 8 months for that person. So what I would do is see what kind of opportunity presents itself this morning, especially on a move back to the hourly midband. If that wants to hold, then there's some opportunity there. And at least if you're wrong, if we are topping out, then you know where you're wrong, and then you know what the area is that you need to short against for a move down. That's how we're going to play it. If you want to learn more about how we're going to play it, come on in. Come on in, do a trial. We would love to meet you. All right, take care. There'll be a midday update. We'll be out with a bunch of stuff on social today. Trade them well. I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.